guys, Sean James here from 999 Capital. Thanks again for joining me today in today's video. We got a great topic for you today. I know it's something that's been requested for me a long time now. And I'm going to be talking about how silver is being manipulated in the markets. And listen, we all know that big banks and the Wall Street cronies are a bunch of scumbags. And it's because of these scumbag ways that led to the Great Recession of 2008, where a bunch of people lost everything, if I'm being completely honest. And this kind of practice has been allowed to go on for so long in the silver market. Before I touch on that, how exactly, or what exactly is the definition of market manipulation? I'm going to read you something from the Securities Exchange Commission on their policy. So, manipulation is intentional conduct to deceive investors by controlling the market to create a false picture of the situation. Kind of sounds like those in the mainstream media, right? CNN, MSNBC, Rachel Maddow, I'm looking at you. But this is not just some fringe conspiracy theory, right? This is something that big banks actually admitted to. Not too long ago, JP Morgan Chase admitted to having done over $920 million in fraud dealings. That's insane, right? And none of them get booked up for it or jailed. Speaks volumes. But what I'm saying is a big reason for this level of fraud is this process called spoofing. Now, what is spoofing exactly? Spoofing is when traders, they place fake orders on a security, but they cancel it at the very end. So let's say if a couple of traders, they sell about 5,000 orders of the iShares Silver Trust to get it down to $18. And at the last moment, investors, they see all this price coming down, so they're more motivated to sell. But at that last moment, these traders cancel their orders, making them a more robust profit at the end. And their whole idea was to inject false liquidity into the market and create a bubble. This kind of method is very similar to another method they employ. I know JP Morgan may or may not do this. I'm pretty sure they do. But it's this thing called fake shorting. And very similar to spoofing, this is what happens. I'll give you a perfect example. Let's say if you come to me and, let's say I'm a brokerage firm. Let's say you come to me and ask to borrow shares because I tell you Tesla's price is going to go straight down, it's going to plummet. So what you do, you borrow these shares in hoping of shorting it so you can buy back these shares at a lower price and make a profit. And I get paid based on the interest that with loan payment and also what you give back to me. But the fake shorting is what happens when the shares that I loaned out to you, they were never issued out by Tesla. That means if Tesla's price goes up, same thing with spoofing, I get more in return, meaning you lose everything. Would you look at that, eh? This is kind of corruption that exists today in Wall Street. It'll probably still continue to exist until Wall Street dies out, unfortunately. But another method I want to talk about is rehypothecation. I know it's a fancy word for those financially technobabbles, but this is where it is. It's very simple. Rehypothecation is when I owe a collateral, when I reuse a collateral to finance a loan. So let's say if I'm at BMO and I use my car as collateral to get a loan, but I use that same car as collateral when I'm asking a loan from CIBC. For all my American listeners, if you don't know these two banks, they're some of the biggest banks in Canada. Just to give you a little bit of insight into that. But what happens, there's this market tension, right? It's pulling apart. BMO wants that collateral on my car, CIBC wants that collateral on my car. And on onlookers, this is a very risky situation. So what happens then? They pull out of it. They're like, you know what? I don't want to invest in this. Same thing goes with silver. What banks do when they're asking for a loan from the Federal Reserve, or they're using the corporate debt to finance their capital structure, which corporate debt is a type of loan they're trying to give out, so people give them money. What happens, they use their silver holdings, their ounces of physical silver, as collateral. Now both parties, they're fighting for it, and now there's this tension. Investors look at this and they want to pull out immediately because they don't like risks. They're very risk adverse. This plummets the price downward. And banks know this all too well, and it's done on purpose. And the final way that they are able to use this manipulation tactics is through the futures contracts. So a future contract, if you're not familiar with it, it's when you agree to buy or sell a security at a predetermined price on a specific date. So let's say, go back to my Tesla example, let's say I say you need to buy about about 1,000 shares of Tesla at $18 on June 25th, 2022, right? So what happens, the expiry date comes, but here's the catch. If it's the physical silver future contract, instead of paying you the physical silver of the $2,500, just for an example, I give you that in straight cash. Well, where did the physical silver go? Well, it's in the pockets of the banks who are issuing it. So they openly lie to your face, but they quell that with that $2,500 cash. This helps them to hold on to real assets while you are getting the smaller end of the stick with the fiat currency. Pretty incredible, right? And this helps them to manipulate whatever kind of physical stuff is going on. If they think that they want to raise up the price, they can do that. If they want to lower the price, they can do that too. So very, very corrupt stuff that's going on. But how exactly was this level of corruption able to exist for so long, and why is silver being targeted? Well, get into that last question first. Silver is being targeted because it's got a smaller market base than gold, unfortunately. But because of the smaller market base, it lessens the liquidity, but also increases the volatility of everything. And back to that first question I posed, how was this able to exist for so long? Well, it actually happened when Bill Clinton, he repealed the Glass-Steagall Act in the 1990s. Now, Glass-Steagall Act, it was created in the Great Depression by FDR, and it was made to specifically stop banks from using their depositors' money to pursue high-risk investments. And obviously, if you know anything about the 2008 recession, that didn't really work out, did it? But after that repeal happened in the 90s, and because of a lot of tax deregulations, I'm still on the side that that was a good thing, but it does have its negatives too. What happened was that this emboldened banks like JP Morgan and Chase to create essentially a monopoly. So they bought up all their competitors' silver holdings, and because of that, today, they own over 130 million ounces of physical silver. Insane, right? And it's the worst part because they know what they're doing and they never get arrested. But that comes to my conclusion here. Is silver still a worthwhile investment knowing all this corruption and dirty dealings is going on? I still say yes. Because even though with all this devilish nonsense, silver is still a great hedge against inflation. Plus, with its increasing industrial uses, that's only going to drive the prices of silver up. And I know you're still worried about this whole manipulation, but that could really end soon, or at least stop it for a brief moment of time, because of the whole Basel III. I'll talk more about Basel III in a later video, because it is a lengthy topic to get into. I don't have the time for that. But Basel III, it's mainly meant for the gold market, but as you know, silver usually follows gold. And because of those new regulations and policies, it will definitely have an impact going forward on the future of silver. So my basic point is, don't give up on hope on silver just yet. I know there was a bit of a dip 2 days ago, where silver dropped in price about $1, $1.50. But that shouldn't stop you from stacking up, because now the price is lower. Keep stacking it up, or keep investing it, and watch as silver grows, because there's going to be some really important market changes. But that's it for me today, guys. Let me know what you thought in the comments below. And like always, subscribe and like this video. And turn on that notification bell too. And don't forget, by the end of August, early September, we are opening up our first silver bank. Maybe the first in the world, who knows? But this is supposed to work as a protagonist to the antagonist of the big banks. And this helps you to retain more of your wealth. Plus, we give you a 3% annual return on your deposits. Pretty cool. And if you're one of the first lucky 100 to open an account with us first, you'll receive a free 1 ounce American silver dollar or a 1 ounce Canadian silver maple leaf. Pretty cool, eh? Just a way of saying thank you to you. But thanks again for joining me, guys, and I'll see you in the next video.